Hi there and welcome to yet another edition of Who Moved the Market. I'm Surabhi Upadhyay and with me on the show today is Sonia Shenoy. Hi Sonia, welcome back to the show.
Well, thanks a lot. And it's a very interesting time because I'm generally always here to talk about autos and every other day auto stocks are hitting fresh highs.
Today we are going to be talking about not particularly autos but a tyre stock. One tyre stock which has had its date with history today. So this is a stock that has hit the 1 lakh mark today. One stock basically is worth 1 lakh rupees. A lot of you might have already guessed which one this is we're talking about, but if you haven't, we're talking about MRF, which I got to know today was incorporated and originally known as the Madras Rubber Factory.
Absolutely. And I've just to, not for our viewers to feel FOMO, but back in the pandemic, right, in March of 2020, the stock was 50,000 rupees. And at that point, you would have felt that, oh my God, the stock is 50,000 rupees. How much more can it go higher, right? So it sort of fell off the radar of investors. But look, we are now doubled since then. And it just goes to show that no matter what the value of the stock is, if there's potential in the business, it can always grow.
Oh, absolutely. And for those of our viewers who are sort of new to investing, just want to point out that the price tag of the stock is not what determines whether it is cheap or expensive, because later in this conversation, Sonia and I will talk about whether MRF is expensive or not. So don't get confused. The price tag of the stock, a stock could be 20 rupees and still expensive. It could be a lakh and still cheap. So don't get confused. We'll demystify a lot of this as we go along. But Sonia, I was looking at some of the history, and this is a company that was incorporated in Chennai, in Tamil Nadu in 1946. They, by the way, started off as a toy balloon manufacturing company. And it was only in the 1960s, about 1961, when they got into this tread rubber manufacturing and rolled out their first tire. So it's a pretty historic company.
It is a historic company, and currently MRF supplies tires across the board, passenger tires, commercial vehicle tires, you have two-wheeler tires, off-highway tires, etc. But it also supplies to over 70 countries.
Wow.
So it has a huge export exposure, and you'll realize that, if you map the trajectory of revenues, right, annually, for the preceding 5 years, say from FY 17 to 20, it was somewhere to 14,000-15,000 crores annually. It's in FY 22 and 23 is when it sort of surged to 18,000 crores and then 25,000 crores. That's also because export markets came back in a big way post the pandemic.
And COVID got done. We got back to driving on the roads, and I guess that explains the way those numbers came about. By the way, I just want to point out here that in terms of the price action, while yes, MRF has been breathtaking, we're talking about a 40-45% up move in the last 12 months, its peer set is also, in the fast lane, because Apollo Tyres, JK, and a couple of other Seat as well. I think there the price action is even higher. I mean, those stocks have rallied, believe it or not, 100% in the last 1 year.
And there's a reason for that. MRF is the most expensive stock in the tire space. If you look at.
I'm sorry to just butting into your conversation right now, and that's mainly because we are talking about MRF, we are talking about tires, but we all actually
take a seat.
Yeah, I will. The thing is that most Indians, and for the longest time, didn't even know that MRF was a company that made tires. You spoke about how they started out making toys and then went into balloons.
Latex
and then
toys
exactly, whatever. For all of us Indians, the fondest memory of MRF, or the only enriching or enduring memory of MRF, is that on Sachin Tendulkar's bat, and now is on Virat Kohli's bat. So I think
trust Mangalam to bring in cricket into most things.
Into every conversation.
Into every conversation, but MRF, I mean, all the...
Actually, I didn't think of that. Now that you're saying it, yes, who doesn't remember their MRF bats?
Tire companies became famous because of their brands was largely on account of cricket. You remember the MRF, Sigma, VT ads and the Sachin covered drive. See, there is drive and tires and all of that and stuff in that. And then it's only after that Seat started having Rohit Sharma as the brand ambassador on their bat sponsors. You have Shubman Gill right now. So I was doing some data out there. The only enduring memory of Indians with MRF is the bat, and then everyone knew, oh, this is also a company that makes a tire. It's not actually a bat manufacturing company.
But that's a great class in marketing, right?
Exactly.
It's a master class in
now
marketing.
That you're saying it, I'm actually convinced that there is a connect. And yes, I mean, we have been seeing these logos and these brands, on bats, on other cricket paraphernalia for a while now.
It's a masterclass in marketing, and it's also a masterclass in not diluting your equity. So the first time they signed a deal with Sachin Tendulkar was in 2001. And it's the first time a tire manufacturer partnered with a cricketer for their bat sponsorship. It was a 100 crore deal. for the first time. All eyebrows were raised. Oh, Sachin
2001?
Tendulkar in 2001.
100 crores
Yes.
in 2001.
Exactly. And
Oh, God.
you know, I mean, it's Sachin
Inflation
Tendulkar you're
adjusted.
talking about. And
Are you thinking of the power of compounding? If
No,
you're
I'm thinking
investing in that?
inflation adjusted, that number is going to be so much bigger right now.
can I blow your mind out there? Had Sachin Tendulkar, instead of asking him for 100 crore at that time, asked them for the MRF stock at that time, which was sub 1,000 rupees, he would now be sitting on 100 times of that. So he would be 1 lakh crore is the wealth that Sachin would have amassed had he asked them for 100 crore worth stock instead of 100 crore worth
That is the
cash.
power of
That's the
compounding.
power of
And
compounding.
you know what? It doesn't look like it's going to stop anytime soon. So before Mangalam interrupted
I'm
us,
sorry,
we were
I'm
talking
sorry.
we were talking about valuations, right? It is the most expensive stock. It's trading at even FY25. It's trading at 23 times, which is 100% premium to its peers. They're doing the same business. They're all selling tires, all selling to the same countries, to the same manufacturers, but it's trading at 100% premium to its peers.
And this is despite the run-up in the other stocks that we've seen in the last 1 year.
Yes, it's also because, you know, MRF has 25% of the market. It has market share of 25%. So its pricing power is a little more. It has passed on all the price hikes, you know, whether it's the crude prices, rubber prices, all the hikes that were undertaken were comfortably passed on to its clients. And also, if you look at it, Motilal also put out a report where they said that in the next 2 years, there is an EPS growth of almost 18 to 20% that's being priced in. So looks like since supply side constraints have also eased in the auto sector, looks like from here on as well there is a big runway for growth. Only thing valuation upside looks a bit limited at this point.
God, I was looking at some more notes, I mean industry-wide notes, and I got to learn that it seems that it's the replacement market which is far bigger.
Yeah.
It's 2/3 of the market. The OEM market is still 1/3.
Yes.
The bulk of the demand is very true. My tires getting punctured all the time, and you know every couple of years, thanks to Bombay roads, you need to buy new ones. And that, according to ICRA, the replacement market would grow in mid-single digits this year. But the OEM market, that's booming, right? I mean, 8 to 10% tire growth is what we're talking about, because the OEMs are making cars, and, you know, and tractors and trucks, and it's really up and away.
And that's leading to the operational performance also improving. You know, I was going through the last 16, 17 quarters of MRF. The margins that they would get were about 11, 12% on an average. In this quarter, in the last 2 quarters, the margins have come to almost 15%. So, you know, there is a big operational leverage that's kicking in right now because of lower raw materials.
It's rather interesting that you guys are putting so much research, analysis, brokerage reports, and your own tires, anecdotal evidence. I've done some of my own calculations as well, and it lands up pretty well. It all comes together. I'm looking at all the batters now increasingly in a more gender-neutral world. Batters who MRF have endorsed, and I'm adding up all their international runs. All right, the only batter right now is Virat Kohli, who's currently still playing. Of the others that are there, Sachin Tendulkar has 34,357 international runs. Brian Lara, 22,358 international runs. Steve Waugh, 18,496 international runs. Virat Kohli, who's still batting, 25,385 international runs. Add all of that up, it is 100,000, basically 1,500,000, which is pretty close to the MRF share price right now. So all you have to do.
I was just saying, what is this?
Where is it going? Yeah.
This is connecting the dots at another level.
Exactly. It makes no sense, but then again,
But it makes sense.
It makes sense without making sense. So all you have to do is now just track how many runs Virat Kohli makes, and every run that Virat
correlate
Kohli
that
makes,
to the
and
stock
correlate to
price?
the stock price. That's what you do.
I mean,
No, you don't do that. You don't do that.
No,
You
don't do that. We are joking. But really, it has been this is good trivia. These are good nuggets, Mangalam. So thank you for that.
And for the 3-4 rupees dividends that MRF gives, despite its 100,000 rupee share price, you just have to track Prithvi Shaw's numbers. Because he's not a good batsman, but he's also endorsed by MRF. So maybe the 2-3 runs that he makes.
The total dividend that MRF gave out in FY23 was 175 rupees per share. It's really less compared to.
That's for Prithvi Shaw.
Yeah.
That's for Prithvi Shaw, not Kohli.
I agree, and that is the only reason why shareholders have been disappointed in the past.
You know, that's one question on the dividends. Why not more? And then the basic question: you are at 1 lakh now in terms of just the price of the share. So why not do a split, do a bonus, do something so that it brings down the cost of buying? And again, I don't want to confuse people with this, but simply just the price of buying. for a lot of retail investors, they find it easier to buy stocks which are, well, one stock doesn't, cost you a lakh of rupees. And I think that's a question that people have been asking MRF for years and decades.
Yeah.
Why don't do a split? Well, company seems...
They're pretty okay with that. I mean, I spoke about that Sachin Tendulkar trivia, right? About 7 years ago, 2017, they did a deal with Virat Kohli as well. They renewed the Virat Kohli deal for 8 years. They paid about 110 odd crore rupees to him. Had Virat Kohli that time asked for stock instead of cash as well, he would have been sitting on a good 250 crores. So he would have doubled that money even at 50,000 rupees. So, like Sonia pointed out at the start, right? Everyone thinks that at 50,000 it is so expensive.
Yeah.
When I started looking at the stock markets, I was looking at MRF. That time it was a 10,000 plus rupees stock. And everyone was like, oh, this is so expensive.
Yeah.
It's become 10 times from there. So who's to say whether it's expensive for people to get in or not? I mean,
absolutely. But just one caveat for the people watching, right? There is a huge capex plan that MRF has, because of which there could be some pressure on the balance sheet, and that's perhaps one of the reasons why they didn't give out too much of a dividend this time as well, because they are undertaking a big capex, and because of that, compared to its peers, the competitive advantage may be a bit limited going forward because of the capex that they have. But the reason they're putting capex on board is because there's so much demand in the market. So eventually there is growth, but there are some hurdles in the near term, like valuations as well as the capex that they have lined up.
Okay, I think that's really well put. A lot of sector tailwinds because crude prices are coming down and there's huge demand both on the replacement side and on the OEM side. But as Sonia mentioned, check out those valuations. Don't be scared by the 1 lakh price tag. Look at the fundamentals and the valuations before you decide to make your next move. Well, guys, this was a fun chat. Thank you very much for joining in and giving us so much of information and trivia on MRF.
And thank you, Mangalam, for interrupting us.
apologies. But that's what they say, right? Tires, you just have to put a brake and then keep on.
And then you keep driving on. All right, we will drive on to our next show. Well, thank you for joining in. Keep sending us your feedback, comments, and queries on this conversation. We'll see you again tomorrow.